Ruchit Jain, who watches the technicals very closely as well. Ruchit, there's definite break coming in the Cadilla charts as of now. The stock's done absolutely nothing through the year so far, at a time where mid-cap pharma has outperformed quite dramatically. So, how would you look at this dip today at 322 for Cadilla?
See, overall, since last 2 months, this stock has formed this lower top, lower bottom formation, and our falling trend line is in place, falling trend line was in place, and the stock has now even gone below the trend line. So probably, I think from short-term perspective, I don't think one should look to buy this stock. On the lower side, 282, 283 is the major support level if you observe the charts on a weekly basis, where the stock could come in near term. Among the pharma space, I think that we have already seen that mid-cap pharma has outperformed, and large-cap pharma stocks such as Dr. Reddy, Sun Pharma, they have corrected a lot. So going ahead, I think it's a good time to exit from this mid-cap pharma space and again go long into the large-cap pharma space. Dr. Reddy is trading around its crucial support zone. Sun Pharma has corrected a lot, and the downside seems to be very much limited from here. Even Cipla has, although has not shown any major correction, but has consolidated in a sideways range. So going ahead now, again, I think large cap pharma stocks at current levels looks quite attractive over here, and they may now go and outperform the mid cap space going ahead. So I think one should move out of the mid cap pharma space now, and again look to buy into the large cap pharma space where decent correction has been seen. Stocks such as Dr. Reddy, Sun Pharma and Cipla are the top bets in this space.
Alright, Sharmila, I'm going to stay with the pharma space, but toss across to you about how do you play it out between DRL, Sun Pharma and the outperforming stock of the year, Lupin. Very pricey, but we were speaking to some of the pharma analysts from Religare yesterday, and they said 2016 is going to be the year for big bag launches. Maybe it'll be in the second half of the year as well. So how would you really weigh out these stocks? Would you think that Lupin continues to be better placed stepping into 2016?
Yeah, I think definitely for 2016, Lupin seems better placed. But I think that as the year unfolds and we get some developments on both the DRL and Sun Pharma, I would agree completely that the fall has been so severe in both these stocks that perhaps it's time to look at them. The only thing is that you just want to wait for a little more clarity, as far as the US FDA letters, especially in the case of DRL. So for me, I think Lupin is definitely a stock that I would probably rank number one between all these three, and then probably Sun Pharma and then DRL. But I think they're now, Sun Pharma and DRL are at levels at which, if you're a significantly longer term investor, you should look to buy.
Significantly longer term effects. Before I put that question, Ruchit, on how the charts Lupin is looking versus the DRL at this point. In fact, we had the opportunity to catching up with the CFO of Lupin to get a sense of how the next year is going to look like. Let's listen in.
We've always done fairly well in India. If you look at our performance the last 5 years, our average growth rate would be about 20 to 22%. And except for, in fact, a couple of years ago when our growth rate dipped about 5.5%, it's always done extremely well. And I think, we are in for a good run in India. Between 15 to 20% is my guess. And we are also expanding into newer therapy areas. And with emphasis on, in fact, technology-led development. We're getting into mobility for tracking, in fact, the productivity of our sales force and the like. We would certainly step on the gas and do what it takes to kind of sustain the growth rates.
Ruchit, how is Lupin looking like on the charts? It's been an outperforming stock for the year. Do you think the charts are supporting that move as you step into 2016?
Yeah, overall the structure is positive for the stock, although since last couple of months the stock has consolidated in the range of 1900 to 1700. Probably in short term, if you look, then the stock may continue to consolidate in this range, but once it takes out this resistance zone of 1900, it's quite possible the stock can again go up to 2025 to 2030 in next 2 to 3 months. So probably one can trade with positive biasness in Lupin too.
All right. That's the call coming in from Ruchit. Let's repeat that for our viewers as we step into 2016. The trade call coming in from Angel Broking and Lupin. Stop loss at 1780. And you can look at a target of 1940 for Lupin, which is currently trading at 1818 at this point. Maruti. Sharmila, as we step into the new year, odd or even is the big norm that everybody in Delhi is watching out for, but as an outperforming stock for the year, Maruti Suzuki has it positioned into the new year?
Well, honestly, I think in terms of numbers, etc., Maruti looks fine, and yes, some of this regulation could actually be in favor of Maruti, considering the fact that they don't really have too much exposure to large diesel vehicles. So possibly some of these things could be a positive for Maruti, but I think I'm more concerned with their, the vote that they had on the Gujarat plant, the outcome of that, and really what it means for minority shareholders. So while I don't think that the stock is going to correct in a hurry, I think within the auto space, it's not probably a stock that's on my list.
Okay. Ruchit, how would you treat out Maruti? And I want to throw in Ashok Leyland as well as the biggest outperformer from the mid-cap in the auto space as well. There has been a big divergence in the auto pack. Ashok Leyland and Maruti, would you continue to believe that the charts are looking strong enough?
Well, if we talk about Maruti, then the prices have now showing consolidation since last few weeks. Probably after a decent run-up, when such consolidation is seen, it's a sign of distribution over here. In technical analysis, whenever we see such consolidation after a big downtrend, then it's an accumulation phase, and after an uptrend, when such consolidation comes, it's basically known as a distribution phase. So we are not betting any longs in Maruti at current levels. In fact, we have even advised our clients to exit from the long positions, earlier long positions, and create short positions from trading perspective over here. We think that in near-term perspective, this 300-400 points range would continue, and prices would could head towards the lower end of the range. So keeping a stop loss above 47.65, even from trading perspective, one can look to go short in Maruti. We are having target of 4,375 for next 1 month perspective.
All right, that's the call coming in on Maruti at this point. A sell call from the technical side of it for a stock that has outperformed so far, but maybe it looks like the good run might be over. It's going to be a tough year. Nevertheless, we caught up with R.C. Bhargava, the chairman at Maruti Suzuki. Let's listen in.
We think the demand next year will be close for us, close to 1.6 million. And getting to 1.6 million is a real stretch. So even next year, only with about 100,000 extra cars, we'll still be short of capacity.
So it is New Year, so let's also talk a little bit about the excitement and entertainment and how that sector is going, stepping into the New Year. Kapil Bagla, Director and CEO at AdLabs Entertainment, probably better synonymous as Imagica to be introduced. Kapil, thank you so much for taking our time speaking to us here and coming to our studios. How has the month gone by? Really been a lot of hoardings up about the New Year celebrations at Imagica. Yeah. How's the response looking like?
See, the December month is a good month for us because that's a holiday time, good weather, and I think it's a month of celebration. And people are generally going out and spending money. So it's been very interesting. What we have seen so far in December, probably we are gearing up for the highest footfall ever in December that we have achieved since opening. So I think to that extent, it is good. We saw some overwhelming response in some of these days, also in December. Like on Tuesday this week, we had the highest footfall ever in Imagica.
What would the numbers look like?
14,100.
And 300 acres of the land that you have at Kapoli?
No, so we have 300 acres of land, but the entertainment project is 130 acres.
Okay, would this include Aqua Magica as well?
That includes
both the projects. Yes, and how is that project doing it? Because that was a big launch for you as well. It was much awaited. Is that drawing in the footfalls?
I think they're drawing in the footfalls quite a bit. And from last year, we had 6 months of operations. Now we have almost first 9 months of operations. I think the growth in Aqua Magic is very encouraging. So as a combination, both the parks are functioning very well. They complement each other very well.
You know, Kapil, we've also had seen a bit of changes coming in from the marketing side of it. You've had buses now to the park. You've changed routings as well, plus the hotels as well. So you've got a branded hotel nearby as well, which is offering packages. How much has that played out well for you in terms of people actually taking on those packages and increasing footfall? footfalls?
Yeah, see, the way that we have positioned Imagica as a project is like a holiday destination. So, unfortunately, whatever is the situation of public transport in this country, we need to make our own logistics ecosystem. I think that we have tried to create that. So, with tie-up with bus operators, tie-up with cab operators in terms of home-to-home packages, I think we have tried to improvise and innovate the way to reach Imagica in a much more efficient manner. And it also expands my base of customers, people who are aspirational and want to go there but are are constrained in terms of transport and logistics. I think we have created something. I think we created a special offer on Sundays for people to come in, because that's a holiday and I think the bus consumption on that day, both from Mumbai and Pune and from Thane and other suburbs of Mumbai, has actually seen almost about 40-50% growth.
Okay. What are the kind of revenues from Novotel Imagica that you're really hoping to see? Because I know there's some numbers that you shared earlier when it had launched. I remember September speaking with you as well. What are the kind of numbers? I
think since the start we almost have 3 months of operations on Novotel with 116 rooms.
Okay.
The performance has been very encouraging. We are averaging above 72% occupancy, which is one of the benchmarks that they're sent in the industry, actually speaking, from the launch of the property. We will hopefully complete the balance rooms by Q1 FY16. So for Q1 FY17. So full FY17 we'll have the entire hotel operational.
Oh, okay.
On a full-blown basis, the revenue potential for the hotel is close to about 50 to 55 crores.
Is it a pure revenue fee or is it a linkage? How is the arrangement working?
The property is owned by us. Novotel manages the hotel for us for a fee.
Okay.
And the fee is a percentage of revenue.
Linked. Yes. Okay, so that was. As we step into the new year, I'm sure you've done a lot of research. It's a very well-made park, undoubtedly. You would have undertaken a lot of what the property should envisage to finally look like with the promoters as well. How close are you to that vision now? How much more changes we see in Aqua Imagica in 2016? Can we envisage some more expansion starting up on that property?
Yeah, I think, see, the whole idea was to create a multi-day destination. We were always wanting to have like international global parks. You go to that destination for 1 or 2 days, 3 days, and spend. We have
the
multiple
Disneyland
options
format. The Disneyland format.
So that's that format that we are trying to use. So we are adding attractions. Our mission was to every 2 years we should add something new to the park. So it reinvigorates the offering and also drives and repeat visitation. So we are adding a snow park attraction. Which probably will be launched in Q4 of this financial year. Okay. So that will be a new offering, and it will probably be the largest snow park in this country that they would have seen. So we are also working on our adventure park, which probably you would see in the middle of next financial year. So I think FY16 or calendar year 16 is power packed with us in terms of new offering.
So Kapil, that would also result in a lot of pressure on the balance sheet for expansion, as well as these things start to, like the projects you've launched already, start to reap out benefits. Have you said for FY15? Tougher question on the shareholders would be, it's been not a great year for the balance sheets. Does 2016 and FY17 look better? Yeah, I think the entire outlook, if you would see, that the total project configuration will play out only in FY16. Because we had the first year where only Imagica was operational. Then the second year only half year we had Aqua Imagica. Now the hotel is done with 116 rooms. It is also scaling up its full potential as the project was conceived. So FY17 will be the year of inflection point, according to me, because all the elements of the projects will play out as they were conceived. And to add to it new attractions, probably we are very enthusiastic and bullish about FY16. Very bullish. On that very bullish note, thank you so much, Mr. Bagla, for coming down and speaking to us. A lot of new offerings for those watching out at that Khopoli Expressway. Snow Park as well, Aqua Imagica already underway, and Adventure Park as well being envisaged. All of that will start reaping great benefits for Ad Labs, currently up 5% in straight. You look at the fact that it hasn't done very well from the listing point, but as rightly said by Mr. Bagla, that it has been a year of expansion and new offerings, and the benefits start coming out next year itself. So that's ad labs for you. And the conversation on new IPOs will continue on the world of mid caps. It's another who takes up Syngene as well, one of the outperforming IPOs for the year as well. So watch out for that conversation. Hiral and Sunanda take up through all the big IPOs and where they stand at this point. Ruchit, I want to talk about the big mid cap movers, and I know it's tough for a technical analyst, but Indigo has to have come into your vision, despite only having listed for the last 2 to 2.5 months. Up till this point, short nevertheless. How is Indigo looking?
Yeah, overall, as you said, since it's a new listing, there is not much price history for which, due to which any analysis could be made. But definitely after the listing, the stock has been moving higher and forming higher top, higher bottom in whatever few recent trading sessions it has. After listing, it has. So probably the recent low was 1074, from where another leg of up move has started. So anyone is those who have subscribed to the IPO or even who have bought after the IPO should continue to hold their position. I won't be able to give a particular target based on such short price history, but 1074, 1075 could be the stop loss, and one can continue to hold on the long side.
I want to talk about some of the losers this year, Ruchit. On the Nifty, the backbenchers, as we are calling them for 2015, undoubtedly the pressure has come from the commodity pack, but the banking stocks have really taken it on the chin as well. 25% down for ICICI, 27% down for SBI and Bank of Baroda as well. How would you view the bank Nifty first of all, and then I'm going to come at some of these stocks. How are they positioned as we enter 2016, just the index itself?
See, overall going ahead, I don't think that Bank Nifty would outperform the broader benchmark indices. I think Nifty, it's one of the Nifty would outperform the Bank Nifty indices going ahead. We have not seen any kind of reversal formation in the Bank Nifty index at the recent lows, whereas in Nifty we have some signs of reversal formations. If we individually look at the components of the Bank Nifty, the top three heavyweights, that is ICICI Bank, HDFC Bank, ICICI Bank and Axis Bank. HDFC Bank is in a consolidation range and does not look that it would go down significantly from current levels. But on the higher side also, I think it would be kept. So it would continue to consolidate in a range. Whereas ICICI Bank and Axis Bank, these two banks still continue to form this low top, low bottom formation and are not showing any signs of reversals. So if these heavyweights do not move much higher from current levels, so I don't think that Bank Nifty would move much higher from current levels. So still, in spite of such, we have seen that in spite of these stocks trading at such lower levels after a decent corrective action in last year, I think still they are not that attractive to go long at current levels. Now specifically coming on to PSU banks, although these banks don't have much, except SBI, the other banks don't have much weightage in the index. SBI I think would continue to consolidate in a range, but other PSU banks such as Canara Bank, Punjab National Bank, all these mid-cap PSU banks are still showing signs of weakness. And now if we just take short-term movement, last 10-12 trading sessions, markets have shown good up move from lower levels. Nifty index has moved higher, Bank Nifty index has moved higher due to private sector banks coming up. But these mid-cap PSU banks have not shown any strength. They were sideways, and in fact yesterday again with higher volumes they have breached their crucial support zones. So clearly signs of weakness is shown in mid-cap PSU banks. So I think going ahead they would further correct from current levels, and hence one should not do any kind of bottom fishing in mid-cap PSU banks. In banking sector, I think if anyone has to look for buying, then Kotak Bank and IndusInd Bank are two large cap, two private sector banks which continue to show strength on the charts. They have outperformed the other benchmark indices, and even if this index or the other stocks move higher, then I think these two stocks would continue to outperform the other stocks. So probably if anyone is looking to buy anything into banking, then Kotak Bank and IndusInd Bank would be the space. Watch out for some more correction in PSU banks, and hence one should not do any kind of bottom fishing over here.
Would you recommend for those who are holding on to HDFC Bank to continue holding on to that outperformer even if it doesn't give stupendous returns, like you're expecting a Kotak or IndusInd to outperform on the charts? Then Ruchit, would you recommend that investors should at least hold on to HDFC?
Yeah, as I said, HDFC Bank, it doesn't look that it would go down significantly. So probably it could continue to trade sideways with positive biasness. So one can, traders or investors can continue to hold HDFC Bank as well. On the higher side, major resistance for HDFC Bank would now come around 1120 odd zone. So probably we can see the stock testing again 1120 in near term.
Alright, in fact, we look at the chart there of how both the stocks, ICICI on the downside and HDFC, the difference in performance and what the NPA levels look like, and that's really where the market has rewarded HDFC Bank for that solid performance across the board, and ICICI, unsure whether you've seen the worst of the problems as of now, starts playing out at this stage. On the broader markets as well, what has been on your radar, Ruchit? Let me throw it open for you. There are lots of mid-cap pharma that's been on the move, financial services and Bajaj Finance as well, but I want to know technically on the charts what has been on your radar at Angel Broking. Where do you think the excitement really lies as we step into the new year?
As I said earlier, our focus is now on large cap pharma stocks. So we are advising our clients to take exit from some of the mid cap pharma and enter long again into large cap pharma stocks. Among these large cap pharma stocks, Cipla and Dr. Reddy are the two stocks which specifically are looking positive from short to medium term perspective. Cipla has been consolidating in a broad range since last 6-7 months, and I think that from the lower end of the range, the stock would now move again up to the higher end of the range. So probably 670 is the first resistance, and if that gets crossed, it's probably there are chances, higher chances the stock would move up to 690-700 range in next couple of months. Other stock, Dr. Reddy, as I spoke about, the stock has corrected significantly from higher levels. You're seeing from 4,400 due to the negative news from US FDA warning. The stock has now corrected up to 2,900. These pharma stocks, large cap pharma stocks, if you observe on the long-term charts, weekly charts, monthly charts, or even quarterly charts, then these are in a long-term uptrend, forming higher top, higher bottoms. And generally, when such long-term uptrends are there, and you get such a big correction on in these large cap stocks, such a big correction should be used as an opportunity to to buy these stocks for your portfolio. So probably I think after this correction, Sun Pharma, Dr. Reddy, they both are looking quite attractive over here to add it to your portfolio. Use this correction as an opportunity. Once all this negative news is out and the stock again starts outperforming, the stock again starts forming higher top, higher bottom formation, then obviously these levels won't be seen again. So I think the large cap pharma space would outperform going ahead. So one can look to buy Sun Pharma, Dr. Reddy and Lupin at current levels.
All right, Ruchit, thank you so much, and a very happy new year to you and all your colleagues at Angel Broking as well from all of us here on Bloomberg TV India.
Same to you. Happy New Year to you all too.
All right, on that positive note, it's a complete wrap on market movers. On the other side, Sunanda picks up all the action and how the IPOs have fared for the year so far. And the big mid-cap outperformer, Nandan Denham, 116%. The management talks to us on the other side.